So, you want to own OpenAI and Anthropic before their IPO? Well, you're probably not going to be able to do that unless you have a ton of money. Anyway, today I wanted to break down some new thematic ETFs that are sort of marketing around Anthropic and OpenAI and more AI trade and the AI ecosystem, and break down a little bit of some of the marketing and some of the facts sort of around companies that try to market around these two big names. So let's get into it. As a friendly reminder, as always, none of this is financial advice. Always do your own research. So for starters, there's two new ETFs that have launched. One called the OpenAI Lab Ecosystem ETF and the other one called the Anthropic AI Lab Ecosystem ETF. Now, both of these ETFs, again, market around the concept of AI and all of the inputs into the AI trade and the AI build out. Well, I think it's really important to understand that these companies that are labeling these ETFs around OpenAI and Anthropic are really ultimately trying to sell their ETFs to retail investors who want to buy into the OpenAI and Anthropic space. And especially since, as of the time of this recording, neither company is public, there's a lot of demand to get in on these companies sooner. However, if you're like me, this is kind of one of those moments where you kind of want to throw the switch and stop, wait, look, and listen and really understand what's going on. If we look at the holdings of these ETFs, and we'll pick on the OpenAI Labs ETF just as our example here, it's predominantly names that are in the NASDAQ 100, and that's it. It's not a very well diversified product that has broad diversification. It just doesn't have it. And I think it's really important that we need to ask ourselves these questions around not trying to invest in a fund with the expectation that it has somehow direct exposure already to an OpenAI or an Anthropic. It's just not possible as of this video. One other really interesting notion here, and I'll link the study below for those that really want to, spend their time reading about this stuff, be a finance nerd like me. But funds that often get built around these hot trends don't always perform as well as they are expected to. In fact, there's actually a fair amount of research that supports that they generally underperform relative to the market over their first few-ish years or so. So that's just something to keep in mind. And they also are going to charge pretty high fees to its investors. And that's just a trend, a component of this ETF space sometimes. And it's just part of the industry that I don't think we as retail investors are always appreciative of. And I think it really does also go back to a lot of the concepts I've talked about previously, and I'll link my FOMO investing video below, but everyone wants to get in on the next amazing thing before it becomes a thing, right? And these two companies are slated to be some of the most hyped large IPOs that the US stock market has ever seen in its history. And it's exciting to watch, but, trying to get that inside track, it's just generally not possible for small retail investors like myself, right? It can't be done, right? It's not possible. So I think that with names, ETF labels like this, we really just need to slow down and practice a little bit of patience, because if you're really interested in investing in these companies, your time will come in a few months. It's just a matter of waiting a little bit if you really are interested in the IPOs, right? But you will through owning the Nasdaq QQQM or the S&P 500's VU, whatever, will likely have exposure to these names over the next year to 2 years. Now, a little fun factoid too, and I'm going to eat my words here a little bit, but this is a little bit of a fun fact. You actually can get access to pre-IPO names via some websites like Hive, and Global Forge is the other major one, but you actually have to have a accredited investor rating, which has a lot of prerequisites. I think somewhere between around $200,000 in income, and then a total net worth excluding your home of around $1 million. So you gotta have some cash kicking around. So it is possible, but it's generally not accessible for most folks. I mean, hey, if I had $1 million hanging out in a brokerage account, that'd be dope, but I just don't. And even if you do meet an accreditor investor rating, there are some liquidity risks. It's not as easy to sell on private markets as it is public markets. So there's just some differences there, but hey, fun fact. So to try to tie this all together, I think this is one of those moments where we all need to take a step back and really slow down and think about these ETF products when they get marketed towards us, or maybe you see it in your news feed or on CNBC or Bloomberg, wherever you're browsing your financial news, and stop and ask what's really going on. It's very easy to get swept up in the marketing and the hype and all that good stuff, but this is where I always like to say your BS meter is your best way to slow down and understand and ask those questions ahead of time, so that way you don't end up making silly money mistakes by buying into names or labels that aren't really delivering on what they're kind of marketing towards. Either way, I would love to hear your guys' takes below if you guys have heard about these two ETF products, if you maybe considered purchasing them, if you do own them, or maybe this is the first time you are hearing about them. Would love to get you guys' take on how you guys view this stuff. We'll see you next time, and keep it classy.